Hello and welcome to Market Domination. I'm Josh Lipton, live from our New York headquarters. There's just an hour to go now until the closing bell, and stocks are at session lows here. The Nasdaq entering correction territory as conflicting messages from the U.S. and Iran fuel uncertainty about the prospects for talks to end the Middle East conflict. Stocks have seesawed really all week, jumping on Monday after President Trump announced those peace talks, closing lower on Tuesday, seeing a slight bounce Wednesday, and here we are right back down again as Brent crude holds firmly above $100 a barrel. Joining me now to help make sense of all these moves, we got Yahoo Finance's Jake Conley and Ben Werschel. Fellas, welcome both to the show. Ben, I'll start with you because you have a great news story out, which I encourage all viewers to go and read. And what you do there, Ben, is you kind of lay out how Trump has now issued really multiple ultimatums, right, on the Strait of Hormuz, but still, you know, Iran has it effectively closed. Walk us through that, Ben, and then I'm interested to get your take on what that sort of suggests, Ben, about who you think, which party has the ultimate leverage right now.
For sure. Yeah. So I'm a bit of a glutton for punishment. So I went back for this story and looked at basically everything Trump has said about the Strait of Hormuz since the beginning. As you mentioned, I found 4 distinct ultimatums that Trump has offered over these weeks. Basically all on different issues from mining to Card Island, but with an overall message here that I'll rain down American missiles unless you freely and fully open the Strait of Hormuz completely. What I think is notable about that, especially with that recent history, is how different he sounded today at a cabinet meeting just a few hours ago. This was not a kind of, he seemed to acknowledge that Iran has kept control of the Strait of Hormuz. They've kept basically ships, only the ships that pass, that they allow to pass. And Trump acknowledged that. I'm in sort of starker terms than he has before. He talked about how if Iran's charging fees, he doesn't like it. He doesn't think they should be able to do that. But the reality is they're doing that. They're charging fees for ships to pass through the Strait of Hormuz because they control it. He also noted a back and forth he had in his talks this week where Iran said they were going to send boats through the strait. They were going to allow Pakistani flagged boats to pass through. And then they did. And Trump was impressed essentially because of the power of that Iran still is able to control the strait in a remarkable way. So to your leverage question, I think that kind of gets at this key point of leverage that Iran clearly has here. Even as they've taken, American and Israeli strikes on an array of fronts, they have managed to keep the Strait of Hormuz under their control, or at least to sort of scare away shippers. They're able to say who passes and more importantly, who doesn't, which Trump is now kind of acknowledging he can't get at other than through negotiations, which are ongoing this week.
Ben, I'm also curious just to get your take about the market reaction here, Ben. Popular averages under pressure. What do you make of that?
Yeah, so I think he had a really sort of line to tread here in this cabinet meeting between kind of the bellicose language with trying to escalate the war potentially in the days ahead if these talks don't go through, but also calming the markets. He talked about how he thought the oil markets would have gone up, or oil prices would have gone higher than he thought. He's also talked in previous days about stocks in a similar way, that he thought they would go down more than they actually did. It's kind of a way to calm markets, but it also, I think, markets are more at the moment looking at the bellicose language he's doing. And I think that's a lot of what you're seeing in this reaction with stocks down today and oil prices up, more on the fact that Trump is kind of telling Iran to get serious, telling Iran that the sort of real deadline is here this weekend, as ground troops are going to be in the region, as there's a potential pivot point in the war coming with a big deadline tomorrow.
Jake, I want to bring you in here as well because you got a new story out as well. And you talk about how analysts are calling this, Jake, the worst nightmare oil shock. Why, Jake? What makes this unique in their opinion?
Yeah, that's right. Right off the top, it's just the number of barrels we have now seen taken off the market, 15 to 16 million barrels per day of oil not available to the market, locked in the Persian Gulf. This is the biggest disruption that the market has ever seen on record. I want to quote from, I was down in CERAWeek with our own Julie Hyman, down in Houston, huge energy conference. BP's chief economist, Gareth Ramsey, called this every analyst study piece, or as you point out, the worst nightmare that we thought could never happen. The Strait of Hormuz was looked at as too big to fail, if you want to think about it in financial terms. Everybody assumed Iran could do something, they could disrupt it, but why would they? The market would be the impact to the market would be too great, the retaliation would be too broad. The comparison we get here is the 1973 oil embargo, right? After the Yom Kippur War, the Arab OPEC nations cut off supply to the US, and this is where you get those images that my generation at least grew up on of your parents, your grandparents standing in line at the pump waiting for gas that was way too expensive because oil barrels came off the market. That was a smaller amount comparatively of oil off the market. And I was talking to strategists who pointed out the impact there was decades long on policy, on the energy market. We're only in the beginning chapter of this. We're only in month 1. And so if this goes on, the impact is just going to keep getting deeper and deeper.
Yeah, to your point, we don't know how long the war goes on for. We don't know how long the oil disruption goes on for. But are you already seeing, Jake, indications that you're kind of reshaping the structure already of sort of the physical oil market?
100%. You already see nations looking for alternative supplies, right? Saudi Arabia has managed to push 3 to 4 million barrels per day through the east-west pipeline that runs to the port of Yanbu on the Red Sea. They're actively trying to build out that capacity. You see other nations talking about making similar moves. Asian refineries looking for who else can we be buying from if we assume that Persian Gulf oil is not as sure as we thought it was. This even goes to the Trump administration lifting sanctions on Russian barrels at sea. That is rewriting what was 8 years of foreign policy. And so you're already seeing this market reform. Dubai prices right now in the physical market are at $160 a barrel, roughly. That's a $60 premium on the Brent paper market. That's going to force all those buyers to try to find new supplies. You see shipments coming off the US, shipments coming off Canada that wouldn't have otherwise been going to those markets that are now going because there is a raw need for oil that is going to reshape how that oil flows. And it's also going to reshape, especially for the Middle East nations, the GCC nations, how they approach Iran, how they approach the Strait of Hormuz, and how they think about economic security when so much of their economic lifeblood is this oil that has to get out of that strait.
Trump did make some comments. I want both you guys to comment on these. Ben, I'll start with you. Trump telling reporters today he expected the gas and oil prices would have gone up much higher, actually, he said, due to the war in Iran. He said, Ben, that energy prices have not gone up as much as I thought. What did you make of those comments, Ben? Did you think that was that Trump maybe not trying to sound concerned, trying not to sound alarmed? Was he trying to sort of suggest, hey, he thinks he has more room, more time to maneuver? What was your take?
Yeah. 2 takeaways from that. First is, I think, essentially what you said there, that Trump is trying to kind of project calm. His overall message on this war is that things are going to plan, things are going to ahead of schedule on the military front. And so he's trying to say that the effects on the economy here aren't going to be as bad as a lot of folks are saying. That's kind of job number one. You saw that throughout his commentary in the last couple of days. Secretary Scott Bessent, the Treasury Secretary, offered similar kind of calming to the market's messages there. I also think a second important factor here is that he's not wrong, that oil has not gone up as much as we thought. What Jake said just now is sort of dramatic and all true, but it doesn't fully explain that crude oil prices are actually below where they were soon after the war in Ukraine. So this is a dramatic oil supply shock, but oil prices are still at $100 is high, but it's not the $140 a barrel that we saw a few weeks after the war in Ukraine. So there is a kind of element here that Trump has been able to, at least on some extent, talk down the crude oil prices to in these first 2 weeks. Whether it holds remains to be seen. There was a good column in Bloomberg about how Trump, one of the wars Trump is winning is the kind of jawboning over the oil markets war, even if he can't open the Strait of Hormuz so far. So there's both of those, I think, are at play here for certain.
Jake, I'll end with you because Trump made another comment I want to get your take on. He also talked about how Iran was letting oil tankers transit the Strait of Hormuz, as I guess he was sort of implying kind of a goodwill gesture. What did you make of that?
I mean, I think the president is going to want to, as Ben pointed out, he's going to want to project calm, control in the situation. Iran is making a positive step forward, right? At the same time, where is that oil going? that oil is going to China, most of it, right? Or a few select other spots. This is not the market reopening. I want to bring up in a televised interview on Tuesday, the Iranian parliamentary speaker, Mohammad Khalibaf, said the Strait of Hormuz, quote, cannot be the same as before and return to its previous conditions. That tells you how the Iranian regime leadership is thinking about this. This is not a return to normalcy. These ships moving are a revenue lifeline for the Iranian regime. They are not some market opening maneuver. That said, as Ben points out, I think the president is going to look to project calm, is going to look to project control of the situation. But I would be hesitant to read it, and all the analysts I talk to are hesitant to read this as some kind of market opening signal.
All right, Jake, Ben, great discussion. Thank you, fellas. Now let's take a wider look at the markets today as major averages hit their lows of the day here. Brian Jacobson, Annex Wealth Management Chief Economic Strategist, joining me now. Brian, great to see you. Market under some pressure here today, Brian. You say things probably get worse, you say, Brian, before they get better. What do you mean by that, Brian? Walk us through it.
Yeah, thanks for having me, even though the markets are down. I think that really the key thing here is, as you were talking about before, is as far as what is the end game here? How long does this really get dragged out? And President Trump has made a number of demands. He set a number of deadlines as we approach that 5-day deadline. Is he going to punt that again? All right. Or is he going to take more decisive action if Iran doesn't come to an agreement, agree and acquiesce to his requirements? And I think that the market being on tenterhooks here, we could see stocks continue lower. One of the basic rules that I use is that when the volatility index, the VIX, when it breaks above 21, nothing good really happens until we get above, say, 32, and then it comes down, right? So we did kind of flirt with the VIX going up towards 32, if not higher, but we didn't get to that point. So I'm not sure we actually saw what some people might call that whole capitulation trade, where people have finally thrown in the towel because of the pessimism about how things might play out. It gets priced into securities. And so I think that until we actually get above 30, maybe 32 on the VIX, we're still in for a little bit more pain here.
You make an important distinction here, Brian. You say higher oil prices could hurt growth more than drive inflation. Explain that.
Yeah, so the Organization for Economic Cooperation and Development, they released their projections, and one of the big headlines was about the inflation warning in there. And it's rightful to be concerned about the inflationary effects of high oil prices because it's very visible. It shapes people's expectations. The OECD is saying that it's going to be like 1.2 percentage points higher for headline inflation for this calendar year. But they also said that growth is going to be better. But I actually think that most of the evidence suggests that there's longer lasting and sometimes deeper problems when it comes to the growth dampening effects of high oil prices. If you just think about it from two different perspectives, right? From a business, as far as your costs go up because of energy. Now, if you're an energy company, you don't mind that, right? Your revenues go up. But all other businesses that use oil and energy, their costs go up. And so as a result, that is a hit to your margins, or it's what we would call in economics a shift in the demand curve. But also consumers, we know that the demand for energy is very inelastic, meaning that the price goes up. It's not like you're going to drive less to your work, right? You still need to go there every day. Maybe you cut back a little on the margin, try to economize with your grocery trips and all that. But it's also, it really crowds out other consumer spending. So that's a shift in the demand curve. And both of those, they point in the same direction in terms of lower growth. So I think that actually the bigger economic effect of higher oil prices isn't necessarily the inflation. It's really what it does to damaging growth.
So given that view, Brian, I'm curious, do you think earnings estimates right now, are they too optimistic?
Yeah, that is really, I think, what the punchline is from an investing perspective, is that earnings estimates, I believe, really do need to be ratcheted down. What I've seen as far as some of the consensus estimates that have been published from a variety of the data providers, it doesn't really look like it has moved that much. It has in certain sectors, but for the market as a whole, it seems like earnings are, people have bought into the idea, and I think rightfully so, about the resilience of corporate America. And I do think corporate America is very resilient. It's just, I'm I'm not sure how resilient those earnings and those margins are, especially in the near term. And so maybe that will coincide with the spike in the VIX is a revision to the 2026 earnings estimates across Wall Street. So I would expect that we might see both of those happen probably within short order.
All right, got your views on the macro, Brian. I want to end here on places where you do see opportunity, though, as an investor, as a strategist. One is the financials. We know, that sector there's been concern, Brian, right? Private credit, credit card caps. Why the financials?
Yeah, so financials is one of the areas that I'm actually overweight across portfolios. And the reason why we like financials is it's one of the areas where the earnings expectations and price relative to that is a little bit more modest compared to its historical pattern, right? So when you kind of look across all the different sectors, rank them by their price to earnings relative to their own histories, it's an area where it's actually fairly attractive. So maybe it's not the exact right timing, but I think that legging into financials can be helpful. Most businesses in the financials area, they are likely going to generate revenues from merger and acquisition activity, trading activity. When you get these spikes in volatility is actually pretty good for the banks in terms of trading. And then I think this will eventually simmer down, and then we should see a resurgence of M&A activity. So I think fee revenues are likely to pick up as the year goes on. So those are the two primary reasons why I really like financials.
Brian, great to have you on the show today. Thank you, sir.
Thank you.
Coming up, how one chip startup is looking to address AI's energy problem. That's next. As AI demand continues to surge, the cost and power constraint continues to grow. Chip startup Normal Computing is trying to help solve that problem before data centers hit what our next guest calls an energy wall. And the company just raised $50 million in a round led by Samsung Catalyst to do it. Joining me now is Faris Sabahi, CEO of Normal Computing, and Yahoo Finance tech editor Dan Howley. Welcome both. Faris, maybe let's start at a kind of high level, Faris. Let's explain to the viewers what your company does. And here's how I sort of understood it, Faris, is that, listen, AI chips, expensive to design, right? And AI, it uses a lot of energy. And what you all are doing is you're trying to sort of address this with software and new chips of your own. Is that how you would frame it?
That's right, yeah. And first of all, thanks, Josh, for having us on here. Really appreciate it. So Normal builds AI software that the world's largest semiconductor companies, right now more than half of the top 10 by revenue, are using to design their custom silicon. And the idea is we're using the same methodology to bring entirely new kinds of ASICs or application-specific chips to market. And that starts with one that runs on 1,000 times less energy. So we think, Jensen, last week, you probably heard him, talk about this idea that for us to really realize the return on investment for this almost $1 trillion in AI infrastructure spend that we're reaching annually, it really comes down to tokens per watt. And that's exactly the metric that we're focused on. And that's why Samsung's leading this round.
And Faris, you made news this week. You announced that you raised $50 million in a round led by Samsung Catalyst. What does that mean for your company, Faris, and how do you put that money to work?
It's a great question. So we're calling this an accelerator round. So predominantly that's going to mean scaling our commercial partnerships, growing the team. And, like a lot of this for us has been about the partnership. So embedding ourselves even further than we have been in the strategic ecosystem. So when you look at some of the investors who are participating, from Samsung, but also Micron Ventures, Celesta, which was founded by Lip Bhutan, the current CEO of Intel, and also Eric Schmidt's First Spark Ventures, you kind of get a sense of the level of embeddedness that we're kind of going after here.
Faris, it's Dan here. I want to ask, what separates kind of your design process from what other companies have? Because you mentioned ASICs. Obviously,
yes.
Google's got their own ASICs. Broadcom's obviously
right
there. You have different companies. We have Grok and their LPU, obviously coming from TSMC most likely. But what is it that separates your chip design from others?
Yeah. It's a very different kind of design that we're targeting. Thank you for the question, Dan. So really, there are two pieces. One is that we are computing where the data lives instead of moving it back and forth between the memory and the processor. This is an area which people are calling processing in memory that's sort of emerging as a very important area for solving the energy problem, other kinds of efficiency problems. The second is that we're seeing that AI workloads like video generation are already noisy and approximate in a sense. And so our hardware works with that noise instead of burning energy to fight it. So we're kind of not fighting the physics, but leaning into it. If you look at just 2 days ago, OpenAI shut Sora down, right, which was their AI video generation model. And really, from my perspective, likely the motivation for that was they were spending $15 million a day just to run Sora. And I think, $2.1 million cumulative in revenue. It just didn't make sense from an efficiency perspective, but that would be exactly the kind of workload that we're kind of targeting and build for with this ASIC. How do
you then, when it comes to the efficiencies, right? We've a report came out recently talking about how efficiencies are going to just, we'll see them just or power rather usage plummet by I think 2030 was kind of what I had seen.
Yes.
And we constantly hear about whether it's NVIDIA or AMD or any of these other companies talk about how the efficiencies are improving and improving and improving. How do you then show that your product is a better option or offering than
Yes.
what they're doing when they say that the efficiencies are gains are going to be there.
Yeah, the efficiencies are definitely improving when we think about where conventional hardware is headed. But I think, we're still seeing that as projected, even with where how quickly the hardware is improving. We're running up against a huge potential supply shortfall. So right now it's projected that we're going to need, if we keep going the way that we're going, 134 gigawatts of power by 2030. Which means that we're going to have like almost a 50 gigawatt gap. And so kind of what we're demonstrating here is that there's an alternative solution to acquiring more energy and finding, creative ways to build nuclear power plants and otherwise, and that actually we can drive down a couple orders of magnitude that key metric, which is tokens per watt, or we say internally intelligence per watt.
Ferris, great to have you on the show today. Appreciate your time.
Thank you so much. Thanks, guys.
Well, tech headlines are coming in fast and furious. First, we're taking a deeper dive into the AI boom and if it's overblown. Next, do you know where your router was made? Well, it may be banned if it's outside the US. And if you were waiting for OpenAI's erotic chatbot, I really just said that. I said that out loud. You're going to have to wait a little longer. To help break down all these headlines, we're calling for tech support with Yahoo Finance's very own Dan Howley. Let's start here.
I've been waiting. And it's,
course you have.
this is killing me.
Who hasn't? All right, let's start here. Report here's making some headlines. You saw this, getting some attention. The AI industry is lying to you, Dan Howley. And the Post basically is arguing, basically the big tech is talking a big game. But let's look at the data. Only 33% of announced U.S. data centers are actually being built. The rest in this vague level of planning, right, bunny ears. And even if they were, there's not enough power anyway to turn them on. Is AI help getting in the way of what can actually get done, what can actually be built?
It's interesting, right? This is from Ed Zitron. He has his newsletter. Where's your Ed at? He basically, he is staunchly on the opposite side of AI booster, right? His contention is that exactly what he laid out in his most recent piece, that AI is, these companies it's all hype, it's smoke and mirrors, it's not really there. He did a good job of breaking down where you see the actual data centers being put up, what it means when a data center is under construction. He says basically a pole in the ground can be considered under construction. I mean, technically, right? It's like under construction, sure. Between that and we got to put the last brick in. That's a pretty big gap, right? And then talking about the power needs and how we're not there yet. Power is something that you've heard these companies talk about till they're blue in the face. I mean, NVIDIA had the head of the Department of Energy on stage at one point at one of their events saying we need more energy. And there's these ideas of, look, I will say that the big pie in the sky thing that these companies push are these little tiny reactors. It's like that's not proven technology. That's not a thing that's being built, right? Like this is like, hey, what would be cool? 1 billion mice running on a wheel at once, right? Wouldn't that it's like getting these things take a long time. And then there's the question, okay, do we cut down on the red tape? And it's like, I don't know. I know, nuclear power is generally safe, but it's also because it's heavily regulated, right? So maybe that's a good thing. And I don't know if many people want, a nuclear power plant the size of a post office to just show up next door, right? There's already issues with these things, these data centers taking up space. What about the power? I digress. I do think that it's some of this is hard to square, right? We constantly talk about, okay, are companies actually seeing a return on investment, or are they not? Are companies that deploy AI in and of themselves, not just the companies that make it getting a return on investment or develop it, but are the ones that deploy it in their actual workplaces, are they seeing a return? And when you see headlines where you have companies saying, the CEOs, everyone's got to use AI, it's like, well, okay, I use Slack because it's helpful, right? You didn't have to twist my arm to do that. I was like, oh, I don't have to walk down the hall? Awesome. And it's dated, sure, but the same idea is, well, I could see the use case immediately, right? why is it that you have to tell these people then that they have to use this, right? Is the use case not showing itself? And I think, there's nothing wrong with a healthy dose of skepticism when it comes to something like this, right? Where we're talking about billions of dollars, every day, and it's like, you could tell me that a company made $100 million last year in sales, and I'll be like, oh, well, that's, we're talking about, $200 billion in sales, or whatever. So I do think it's one of those things where it's still hard to determine, are we actually seeing these returns on investments from not just the companies that develop this, but the companies that use it? Are they actually going in and saying, man, we're much more efficient? Or, okay, you're more efficient. Then we also hear, well, now they're doing a lot more work. Well, what the hell is the point of AI then? Wasn't I supposed to not be doing a lot more work?
I'm working more than ever.
Yeah, I thought I was supposed to be able to go, I was going to work less. Now this is going to help me. And now it's like, oh, okay, well, you're going to work a lot more. Yeah. What am I doing here?
Topic number 2. Here's one. Bring it closer to home. Per The Verge, you saw this. The U.S. government just banned consumer routers made outside the U.S. The U.S. claiming foreign-made routers, Dan, pose a national security risk. How disruptive is this going to be? What does it mean for your friends and family, your consumers?
So according to the Verge report, this is just stuff that's will be developed. Stuff that would need to pass FCC muster going forward, right? If it's on the shelves already, you can still buy it. If it's in your home, you're okay. And look, there's something that, hey, hands up, don't do it. But you should update your router on the regular. There's firmware that comes out that can actually improve it and improve the safety capabilities. You should do that. Do I? No. Do I also eat an entire bag of Reese's at once when you're not supposed to? Of course. So whatever. Yeah. But it is, something where I don't think you're going to be able to go out to the stores and just buy these routers. Now, that is if they don't get special certifications, and that's probably where we'll end up going. There's not many routers made in the U.S. Even U.S. companies, they're made abroad, right? I mean, so
did you think when you read this, Dan? Did you think, all right, the argument is national security, and maybe it is. Do you think it was possibly national security, and we'd like to reduce dependence on certain foreign supply chains?
That could be it.
No column A, column B?
I think it's column A, column B. I also think that these are notoriously less safe devices when it comes to cybersecurity, right? Like your router isn't exactly the most locked down device in your house. And by the way, it's the thing that connects you to the internet, right? So it's one of those things where I do see the cybersecurity implications, sure, but the manufacturing aspect of it, I feel a little less so on that. It's not like that cool, ooh, it's a chip, it's a car, it's a phone. It's a router. It's like, all right, well, I hide it behind stuff, which you shouldn't, by the way, just for, range
You're
and stuff.
You're like 3 in the hole right now. You're not updating. You're eating too much candy. Let's end here. FT reported, you saw this. OpenAI putting erotic chatbot plans on hold indefinitely. Decision follows staff and investor concerns about sexual AI content. Here's the FT. They say the sexual chatbot faced growing pushback over how it could encourage unhealthy attachments to AI systems, seems a reasonable concern, and expose minors to problematic sexual content. What do you think?
I think it's just a disaster of untold proportions. This is something that the world needed desperately, and they've taken it away from us. No, this was ridiculous to begin with. This was absolutely ludicrous.
This was basically the Dan Howard take on this story, though. I'm like,
yeah,
what are you doing?
Why are we talking
here?
about this? Like, do you think you're cool? Like, my AI that's supposed to help me figure out, how to change a tire or something like that. Now it's basically a porn bot. Like, get out of here. There's plenty. Look, the internet exists. Yeah. It's out there, guy. You don't have to be, everything.
Did you think I'll get out of this. Is this Sam Altman basically also just, listen, I'm just going to streamline this puppy as we head for this IPO? Because you had this, you had Sora.
Yeah, I mean, that's got to be it, right? Yeah. They were talking about, ads and obviously ads are something that they have to do, right? If this is their business model where they're a consumer-facing product and aren't as, aligned with the enterprises as Anthropic is, you're going to have ads. But yeah, I think cutting down on this, cutting Sora, which, look, every company, please stop with AI slop. We don't need more of it. We talked about the fruit thing yesterday, Fruit Love Island or whatever it is. yeah, whatever. This is a good decision. I don't think that this whole edginess idea, oh, we have to be super edgy so that people think we're cool. You're a company, man.
You know what's cool?
Just chill out.
Profitability is cool.
Yeah. Also,
that's cool.
make money, by the way.
Yeah.
Also, let's go Mets. I'm just throwing that out there.
Why not? Dan Howie, thank you, sir. Coming up, all the latest from CERAWeek in Houston. We're joined by a man who brought it all together.
Welcome back. I'm Julie Hyman. We continue to be laser focused on the oil markets because of the events in the Mideast. And I'm just back from Houston, Texas, where the CERAWeek by S&P Global conference is taking place. It's an annual conference where heavyweights in the energy sector gather. And this year, obviously, it is more timely than ever. I want to bring in Daniel Yergin, vice chair at S&P Global, author of many books on the oil industry and really steeped in the history of the industry. Dan, we sadly could not catch up there on the ground, but I'm so pleased that you could join us now.
Well, thank you for being down here.
Yeah, it was fascinating to be there, and I know that you've been really processing a lot of conversations that you've been having. I was struck at the very beginning of the conference as you were talking to Mike Wirth, the Chevron CEO, and he talked about where physical prices are of oil right now versus where we're seeing futures. So I want to start, Dan, with should oil prices, so should futures prices be higher than they are right now, given what we're seeing on the ground?
Well, everything we've heard here is about disruption. And one of the CEOs said it'll take about almost 2/3 of the year to finally clear up the disruptions from where we are today. So there's certainly more risk there. But of course, the price goes up and down on a word of whether there's negotiations or not. But we saw when there were no prospects of negotiations, prices were going up above $110 a barrel. And certainly in Asia, it's not a matter of prices, it's a matter of shortage.
And so do you think overall that the market is sort of accurately pricing the risks that we're seeing to supply, even as there's, not really anything flowing through the strait?
Well, I think it's, the market doesn't know anything more than any of us know, really, yeah. And so I think it's bouncing around on basically on news about disruption in the Gulf, and the news is there a negotiation or is there not a negotiation? But I think underlying it is, for half a century almost, people have talked about a nightmare scenario involving the the Persian Gulf and the Strait of Hormuz. And if we're not there yet, we're certainly a lot closer to it than we've ever been before.
And put this in perspective for me. Again, as I said, you're really steeped in the history of the oil market. So put this shock in perspective versus, shocks that we've seen in the past. How does this sort of rate?
If we go back, you go back to the 1970s, and in a way, this shock began when the oil workers went on strike in Iran in 1978, and we're now seeing the ultimate consequences of that. The 1973-74 one changed world politics, that's for sure. But this is by far the largest disruption that there's ever been. And it isn't just Iran and Iraq and Kuwait being out because of Iraq's invasion of Kuwait. It's not just the disruption of Iranian oil in 1979 and 78. This is a disruption of the whole system, which is fundamental. It's 20% of world oil, 20% of LNG, 20% of petrochemicals, fertilizers, helium, you're going down the list. This is a disruption that reverberates across the entire economy.
Dan, what is the price that you see for oil, or maybe more pertinently here in the U.S. for gasoline? Is there a price at which you start to get demand destruction that sort of limits how high that oil will be able to go?
No, the price could still go higher because we haven't, it's just the final cargoes that left a month ago are probably arriving now. But you see already in Korea, moving towards rationing, controlling. Japan, which gets over 90% of its oil from the Gulf, taking measures. And this is affecting petrochemical plants because they're not getting the products they need. So, but here in the United States, so far, it's just registered in terms of gasoline prices. And I don't know if we're at $4 yet or not. But I think once we start getting above that, that really hits people in their pocketbook and they start to change their behavior. And that question is out there, is what kind of demand destruction? And that's a question that we've heard this week at CERAWeek. For the oil industry, this is not, prices like this are not good for the industry because they're concerned about long-term demand and stability, not the kind of spiking price. So we'll start to see, and the other thing that will, of course, heat up, in addition to all those lines in the airport, TSA is an entirely different issue. As the prices go up, it becomes a political issue. And we know once it's a political issue, that gets a lot of rhetoric and people wanting to do something, even though there's not much you can actually do.
Well, and we've seen the administration take some steps, right? They've talked about releases from the SPR. They've talked about removing some of those sanctions on Russian oil and even Iranian oil, which would have been unthinkable very recently. But that hasn't really seemed to move the needle.
No, it is. And what they're doing is it's not on the production, it's that oil at sea. So they're sort of seeing the Iranian and Russian oil at sea as like another strategic petroleum reserve you can call on to. But if this goes on for a month, you'll have lost roughly 400 million barrels, which is roughly the release from the government strategic stocks that's unfolding. So, I mean, as one of the CEOs said, this is a matter of duration. If it's another week or two, it's one thing. If it's 3, 4, 5 weeks, it's another thing. And the other question is the amount of damage to infrastructure. Julia, as I think you know, I did a dialogue with this video dialogue with the CEO of one of the major Gulf oil companies who was just talking about the destruction that's already occurred to their facilities. So it's not only unplugging the Strait of Hormuz, it's also assessing what has been the damage and how fast can production come back. Dan, and I'll say, if I could say one other thing, please. We certainly heard a lot here in a way that we haven't before about inflation in terms of supply chains. We've heard it in terms of the electric power industry, and certainly now in terms of oil supplies. The one price that really hasn't been affected in the energy sphere is the price of natural gas in the United States, because we have a lot of it.
We do have a lot of it. I'm curious, Dan, in all your conversations, is there something that really surprised you? I mean, I know you talk to these folks all the time, but I am curious if there's something that really stood out to you.
Well, I think, one of the most dramatic things, I don't know if you saw it, was Maria Chimoda, the Nobel Prize winner, her address, Chamorro, to the group, where she had very free market approach to her vision of what Venezuela will look like if she comes in with a new government. And I think people were really quite surprised by the focus on the economic aspects as well as the democratic side. I think that certainly was one thing that, and she got 2 standing ovations. There were probably 1,100 people in the room at that moment. I think that stood up. I think this focus on supply chains and inflation was something I hadn't anticipated to hear as much about. And that was, certainly strong. I mean, as you know, in addition to the crisis, in addition to Ukraine, in addition to Venezuela, in addition, of course, to the war, the other big thing here is, and it goes back to the previous episode you just had, which is the tech industry meets the energy industry and getting to know each other and working together. As the CEO, the president of one of the major tech companies said, in 2008, they never talked about electricity. In fact, they didn't talk about CapEx because that just wasn't part of it. And now, bringing it together and then, and how do you scale the electric power industry? And that question of affordability, of course, which was much discussed.
Yes, and I definitely was discussing that with some of the power CEOs I spoke to. Dan, really appreciate you stepping away. I know how busy you are there, and appreciate the conversation. Thank you.
Well, glad to be with you all. Thanks. Thanks, Julie.
Thanks. Coming up, Josh will be back and dive into how one AI-powered business travel platform is navigating the recent uncertainty.
Business travel and expense platform Navan makes a milestone step in the fourth quarter, hitting its first full year of positive cash flows. That's 1 year ahead of target. Company seeing the stock surging here. Navan CEO Ariel Cohen joins us now. Ariel, it is great to see you. Why don't we start, Ariel, with these earnings results, because your stock is ripping higher in today's trade. Your revenue up about 35%. Your gross booking volume up about 40%, Ariel. I'm just curious, how are you delivering that kind of strong performance, Ariel, against a backdrop where I think a lot of investors, they might have assumed, listen, this has got to be tough for a travel platform, war, TSA chaos. Walk us through it, Ariel. How are you navigating this?
Yeah, first of all, thank you for having me. I'm excited to be here and basically telling our story. And just to take a step back, Navan is a platform that is basically doing fundamentally two things. For companies that are employing employees that travel, we save 15% on their entire travel budget. So if they're spending $100 million on travel a year, they will spend 85 with us. So that's significant, especially in times like this with a lot of economic uncertainty. But more importantly, for the employees, for the travelers, for the executive assistants, we know how to help them really easily when they're on the road using AI. So all of these interruptions that you see, the Middle East, we had two major storms during this Q4 that we've just reported our earnings. Obviously, TSA lines right now. All of these things together, the Navan platform is actually designed to support you in these situations, and therefore, as a traveler, you are actually becoming more loyal to us in times like this, and you can actually see it with our growth rate and our numbers.
What are corporate clients, Ariel? I'm curious. What are they asking you for the most right now? Do you have line of sight there? Like, is it rerouting? Is it, listen, I got to change my itinerary last minute? Is it cost control? What do you see?
It's both. So first of all, when you go to our system and you're a day before the trip, the system will tell you it's raining right now in New York and it will take you longer to get to the airport. But then the TSA line right now looks like this. And by the way, if you have Clear, it will look like that. So we are giving you all of this information, which is really, really important, not just about saving time, but business trips are important. These days, they're even important more than ever because you need to meet your goals. It's your sales team that are going out there and closing the deal. It's the C-level that are making sure that the company is okay. It's the business development. So this is really, really important now more than ever. On the other side, you have all of these interruptions. So our ability to tell you up front, take an extra 30 minutes when you go to the airport. Or if something happened, we're going to support you. And we are supporting you in seconds. Just to give you an idea, during the two storms in New York, 55% of our support was done by AI with 85% satisfaction, which means that you are really happy with that. And this is with an alternative to wait for hours on the line waiting to get service when there is an event like a storm. So companies care about cost, but they also care about their employees' time and mainly about their employees' performance. They don't want their sales team to spend a lot of time on the line figuring out how to change a flight.
Ariel, do you see any evidence in your business, on your platform, of companies pulling back on travel, Ariel?
No, we actually don't see that. And again, you can see it from our reports. We grew the bookings, GBV, on our platform in Q4 by 42%. This gives you a good idea of usage. We also have a good idea of what's going on right now. We see a lot of changes, more than usual. So definitely a lot of people will change their trip a day before, a day after, 2 hours later, I've missed my flight. But we don't see any cutback on travel budgets or travel at all.
We hear a lot, Ariel, increasingly of airlines, and you've heard this, they're emphasizing premium features, premium experiences. How does that benefit your business?
This is actually really important. We view travel as something that is universal. It is relevant in the business work. It's relevant be leisure. This is when people are combining their business trip with their personal trip. Is an extremely strong use case for us, and it's growing, which tells you that people have more time to also invest in themselves, which basically tells us that as people are kind of experiencing the world. Travel is a really important part for them. And Navan is a really big part of that experience. And for us, experience is planning the trip, everything that is happening when you are on the road, including we recently announced that you can book restaurants with our platform. And when you're coming back, you can automatically expense your trip. So we really care about every step, making sure that you can actually focus on being there, on the experience, on meeting customers, being in your vacation, and not with all of the hardship that usually comes with travel.
You mentioned AI, Ariel, and you're an AI first company. Your AI assistant, Ava. I'm curious, walk me through one, how does Ava improve the customer experience, Ariel, but also how does it make your own company more efficient?
Yeah, so first of all, everything that we do, we walk it back from the customer, from the traveler. So when we introduced the chatbot, it was important for us that it will not be, we are all familiar with these chatbots that you are kind of yelling representative like a madman. That's not what we wanted to do. We wanted to do something that is smooth, that supports you in something that is super emotional and super stressful, which is travel, which means that we had this ability to orchestrate AI agents which are basically done everything automatically, very fast, but also with people, with real life agents. And sometimes it will be behind the scenes and you're still talking with Ava. Sometimes Ava will actually transfer you to an agent. And the reason is that there is no such thing in the complexity of travel as just an AI agent. But when you augment the two and you orchestrate it perfectly, you are providing really good and fast service to our travelers.
Ariel, you do have competition, including some big names, and I'm curious what you think gives you the competitive edge.
I think it's a lot of different things. The first thing is that we are definitely creating massive savings for customers that are using us. So that's really, really important. But the second thing, and we actually reported for the first time our churn number. We have 98% retention, and this is for years. It means that once you started to use Navan, you'll never stop using it. It means that people love our system. Our NPS, this is the satisfaction of people from our platform, is 47. This is really high. So we are obsessing about the customer. We are obsessing about the travelers. And that's why we win. We reported in Q4 that our net new sales, these are new companies that are coming to the system, grew by 50% compared to Q4 last year. This means that we are really taking a lot of share from our competitors.
Yeah, all 13 analysts, I'm just looking here, all 13 analysts on Wall Street who cover your company, all 13 have a buy. 0 holds, 0 sells. Not bad, Ariel. Thanks for your time today. Appreciate it.
Thank you so much.
Coming up, we've got you covered with all the action following the closing bell. Stocks ending the day lower as losses accelerated into the close. Yahoo Finance's Inez Ferre joins now with a closer look at that trading day. Inez.
Josh, the Dow down more than 1% right now. The NASDAQ down 2.3% near the lows of the session. In fact, this would be correction territory for the NASDAQ, and the S&P 500 down 1.7%. I want to mention what's been happening with the 10-year Treasury yield, because we have been seeing that going higher at 4.42%. When the 10-year Treasury gets high, this creates problems for the rest of the market, a higher interest rate on debt, and you have higher oil prices, which is part of the reason why this is driving up that 10-year Treasury, because strategists are pointing to the fact that you have other countries that need to get their hands on dollars. You've seen the US dollar going higher. They have to protect their own currency, so they may be needing to sell assets denominated in dollars. Taking a look at the sector action, you are seeing technology that took it on the chin today, communication services, industrials as well. Something else is going on also with technology as well. The Mag 7, take a look. Most of the Mag 7 in the red today, except for Apple. That's because of a development surrounding Siri. But you are seeing Meta down 8%. Part of what was weighing on the stock with Meta was that ruling surrounding social media addiction. So Meta down 8%. Alphabet also lower as well. You also have an AI algorithm development from Google, which means that perhaps it may not need as much memory capacity. So we have seen the chip space taking a hit today as well. So you can see the semiconductors pretty much in the red across the board. You've got NVIDIA that's down more than 4%. You also have some of the other memory players as well. SanDisk down more than 10% today. And also Micron taking it on the chin, down 7%. Josh?
All right, thank you, Inez. Appreciate it. Well, let's digest what investors are seeing in the markets today. Jordan Risotto, Gamma Road Capital Partners Chief Investment Officer, joining me now. Jordan, great to see you as always. Let's start here. You say markets could be underestimating the war, the impact, the domino effects. You call comparisons to past geopolitical events. You say they're dangerous. Walk me through that. What do you mean?
So we've seen a lot of narratives since the outbreak of the war that stay the course, geopolitical risk and geopolitical events tend to have a short-term impact on the market. And the market typically, equity market specifically, X months from now, but near to intermediate term are higher. Mm-hmm. And
this is what you're taught. Look through it.
That's right. That's right. And it's certainly understandable. Any plan or strategy you have, you should absolutely stick to it. That's why you have a plan in advance. However, the dangerous aspect is treating and grouping all geopolitical events as a homogeneous group. Each of them has their own idiosyncratic aspects, attributes. This one happening now certainly has a number of unique attributes, right? We could start with the pulling of maritime insurance coverage. We have seen in past geopolitical events that maritime insurance costs have certainly gone up. Premiums have changed, underwriting standards have changed. We've never seen the plug completely pulled. Typically when you have sovereign nations at war, it is a single sovereignty that you're dealing with. Here, because Iran implemented their Mosaic Doctrine, which is a strategy that's been in place for decades in the event of this type of development, when the war commenced, the IRGC split into 31 autonomous units. And the key word there is autonomous. So now, whether you're talking about on a military dynamic, whether you're talking about counterparty risk for insurance underwriting, or any other element of managing this, and now as we've seen this week with diplomacy, it's difficult enough dealing with one autonomous group. Dealing with 31 autonomous groups certainly raises the bar and the challenge and the likelihood that something like this can persist. When we say Iran, we feel that we almost have to say that in air quotes to a degree, right? After the death of Khomeini and the fragmentation of the military forces in this nature, who specifically is the United States dealing with? You'll notice in the news coverage, not just in the US, but around the world, it's very difficult to specifically state, who is representing the interests on Iran's side. We know that, of course, de-escalation is a prerequisite. It was definitely encouraging earlier this week, to hear some signs of de-escalation, and you saw the market reaction to that. So certainly, the market participants are standing on the toes, waiting to hear of that. However, what we've seen in terms of Iran's response to the initial 15-point proposal, Iran's counter-proposal, and then the rhetoric that we hear out of the White House today, this looks a lot more like a stalemate than a negotiation. And then finally, we have seen a slowdown of flows in past energy-related crises and geopolitical events. We've never seen a complete stoppage through such a crucial waterway as the Strait of Hormuz. And we've never seen this level of damage and destruction done to storage facilities, to production facilities, in such a crucial area of production. And so one of the greatest risks that the market may be underappreciating is even after the military conflict finally abates, how long will it take to bring that production back online and to get those flows back into the market and to get to their end consumers? Energy markets, whether you're talking about crude or LNG, it's not like turning on your kitchen faucet. Once these things get shut in and shut down, it can take weeks at a minimum because of regulatory reasons, because of safety reasons, because of operational reasons. And so there's multiple layers of the time element here that potentially is being underappreciated by markets.
So against that macro, Jordan, I'm just curious, what are sort of the key signals in the market you're watching every day? Like, is it dollar, bonds, gold, and what's the signal they're sending you?
Yeah, so the cross-asset relationships have definitely been telling us that, and we're still very early into this, right? Mm-hmm. This is just since the start of the month. But what we've seen is the dollar has received a bid. Traditional safe haven assets like gold, like long-dated treasuries, have actually sold off, along with risk-based assets like global equities. And that tells us that we are not seeing necessarily a rotation into traditional safe haven assets. We're seeing a broader deleveraging. We're seeing a broader portfolio risk level reduction across the board. The fact that the dollar is bid while assets like gold and long-dated treasuries are actually falling tells us that portfolio risk is being brought down. The proceeds from those sales are not rotating into other areas of the market, at least at an institutional scale yet. They're being held outright in cash and money market equivalents.
Let me get you on this, Jordan. I mean, for a bottom line for a viewer, for an investor right now, how should they, in broad strokes, be just kind of thinking through and managing their portfolios right now? Should they be rethinking diversification in this environment?
Well, that's the key word. What is your source of diversification? Mm-hmm. And what are your assumptions about how that diversification should play out, right? And so most balanced funds, whether it's a 60-40 type construct or a traditionally diversified portfolio in the sense that long maturity bonds are in the portfolio specifically to provide balance, to diversify equities when equities sell off. Mm. That was largely the case in the construct over the last several decades. What we see historically is that particularly when there is greater uncertainty and volatility around inflation expectations, like right now, and even worse if there's a fear of a stagflationary environment like we're beginning to see right now, we actually see that bonds and equities tend to move in tandem rather than in opposite directions. Mm-hmm. And so the assumption underlying the diversification that traditional fixed income, particularly long duration fixed income, can provide, may become more questionable assumptions going forward.
Jordan, great to see you as always, especially on set. Thank you.
Always good to see you.
Coming up, we look at the outlook for mortgage rates. That's coming up next. Mortgage rates climb further above 6%. The Middle East conflict reversing the downward momentum rates. For more on the housing scene, we have Yahoo Finance's Claire Boston. Claire, good to see you. Let's start, Claire, with a new story you have out, which talks about how serious mortgage delinquencies are actually on the rise now. Walk me through that, Claire. What's driving that?
Yeah, so we are seeing an increase in what we call a 90 days past due or a foreclosed mortgage. And these are the most serious types of delinquencies. And they're up about 25% in the past 4 months, which is pretty significant. But what's happening here is not that all of a sudden many, many more people are defaulting or going seriously delinquent, but rather the people that are delinquent are staying delinquent. There are all these ways that you can get out of this boat by doing things like, just getting current on your payments or getting your loan modified. And what we're seeing is it seems that these people are not doing that. And so, that may indicate that they are feeling stressed for longer, and that's not a very good sign.
It sounds like, though, Claire, like delinquencies, though, they're still well below, right, the financial crisis. So how concerned should investors be when they hear this?
Definitely. So right now, when we talk about a rise in serious delinquencies, we are talking about a rise to less than 1 percentage point, which is way, way lower than the crisis. We saw delinquencies get up to 8% at one point back in 2009. So we're not there yet, but the trend is not moving in the right direction. And when you look at all the other economic indicators we have right now, suggesting that we're kind of in like a K-shaped economy and consumers on the lower end are feeling stressed, it is something that economists and housing people are going to want to monitor.
All right, Claire, topic number 2. There's an article on Yahoo Finance, mortgage rate predictions for the next 5 years. It's an AI-powered forecast through 2030. Bottom line, when you look at this, mortgage rates aren't coming down dramatically anytime soon here. Does that sort of, broadly, Claire, kind of dovetail with your view?
Yeah, definitely. We're in a really tough moment right now. As you mentioned, mortgage rates have been moving up these past couple of weeks, directly correlated to what we're seeing in oil prices and just this uncertainty about Iran. So we've got this immediate issue that's keeping rates up. But even if you look back to long term, people were not telling me that they would see a real catalyst to get mortgage rates below 6%. Maybe they could go into the 5s, but certainly these days of 3% that I think people dream of, people think that's gone because the circumstances that got us there was a really deep economic crisis. And at least for now, that's not anyone's base case, and that is good.
So if I'm hearing that, though, Claire, and maybe I've been on the sidelines because I've been waiting for that 30-year fix to come down hard, am I potentially waiting for something that you don't see happening near to intermediate term?
I think it really depends what's going to happen with this war. And of course, no one knows that because just a month ago, we were at interest rates below 6%. And a lot of people were feeling pretty excited about that. And I think there is still some belief and some hope in this market that if we get this Iran situation resolved, if oil prices go back to where they were before this war broke out, inflation expectations would go down, mortgage rates would go down. You could at least get maybe a 5.99 again. But right now, unclear what's going to happen next. And I think that there is fear that mortgage rates could go even higher from here. So, kind of depends on your economic goals here, but this is not good news going into spring.
All right, Claire, finally here, per the Journal, you saw this. Fannie Mae to accept crypto-backed mortgages for the first time. What do you make of that, Claire? Is that a smart way to sort of expand access to home ownership?
I think this is really a reflection of some Trump administration priorities here. We do know that the administration is pretty friendly to crypto, and this is something that could be helpful for some crypto owners. There have been crypto mortgages before, but they're really niche. The difference here is that most people get mortgages that can be purchased by Fannie Mae or Freddie Mac. So having an opportunity to use your crypto instead of a down payment could make a difference for some people, but there's a lot of catches. The main one being that you would use your crypto instead of a down payment, but you would have to take out a loan on that crypto. So then you're paying extra for your mortgage there. And at the end of the day, you also can't sell that crypto or do anything else with it because it's collateral for your loan. So I don't know if people are going to want that per se.
Crypto is volatile, Claire. So what happens if those assets, drop hard?
Yeah, so that's the other interesting thing. If you take out one of these loans, nothing happens to you. You still have to pay back your loan, but you're not going to get margin called or own anything else. But I do wonder, that's kind of a little bit more risk for these lenders who are doing those loans, because all of a sudden the collateral that they have is worth less. And again, this is just a partnership with one company. This is not some systemic issue or anything, but it really does go to show that crypto is volatile. There's still some unanswered questions about how this is all going to work. And I think it's really going to be really interesting to see, who is taking people up on this, and is this something that really moves the needle for those holders of a lot of crypto?
Claire, great to see you as always. Thank you.
Thank you.
The average American adult spends about $1,200 a year out of pocket for medical expenses. It's according to the 2025 Milliman Medical Index. For many people, that can feel like a lot, of course. So what tax savings are available for these healthcare costs? Joining me now as part of our Write It Off or Nice Try segment presented by H&R Block, Carolyn Bruckner, the Managing Director of American University's Kogod Tax Policy Center. Carolyn, it is good to see you. Why don't we start right there, Carolyn? Big picture, can you deduct medical expenses?
Under certain circumstances, sure. But unfortunately, the rules are really limited. You have to have a lot of medical expenses. There's an initial hurdle of that you can only deduct expenses that are unreimbursed that are more than 7.5% of your adjusted gross income, number one. And number two, you have to have total allowable itemized deductions that are greater than the standard deduction to deduct anything at all. Most Americans take the standard deduction rather than itemize, so they incur lots of unreimbursed medical expenses that they can never deduct. It sucks.
All right. Question number two, Carolyn. Are health insurance premium payments, are those tax deductible?
They can be, if you can meet those hurdles of, number one, being able to itemize. So you've got maybe a mortgage interest deduction plus deductible state and local taxes and a total medical expense amount that is greater than 7.5% of your AGI, then sure, you can add in your out-of-pocket medical insurance premiums to that total. But again, you have to meet those hurdles in order to deduct anything at all.
What about, Carolyn, those tax advantage savings accounts, right? HSAs, FSAs, which account gives you the bigger bang for your buck, tax-wise?
Well, of course, the answer is it depends, like everything else in tax planning. So if your employer offers a high deductible insurance plan and they offer an HSA, that is a really great option for setting aside pre-tax dollars from your wages up to certain amounts that are established by IRS every year. And those tax dollars are what you use to pay out-of-pocket expenses until you hit that deductible and your insurance kicks in. Now, you could be lucky, you could be totally healthy, you might not have expenses. And in that case, those dollars are allowed to remain in that account and grow tax-free, and it's portable. On the other hand, if you have a really good insurance plan and you decide to take out a flexible spending account or an FSA, it's a much lower limit, about $3,300, and that limit is again established annually by the IRS. But it's use it or lose it. So you've really got to have medical expenses that are going to be out of pocket in that $3,000 range in order to get the maximum benefit from that flexible spending account pre-tax dollars set aside.
All right, Karen, so here's another one. About 12% of American adults taking weight loss drugs. That's according to Gallup, right? Those medications we know can get very expensive. Can you write off that cost?
Again, it depends. It depends on if you have a medical diagnosis for taking those kinds of weight loss medications, say, for example, for type 2 diabetes, obesity, heart disease, hypertension. In that case, you may be able to deduct the cost of those weight loss drugs. If, again, all of your medical expenses are greater than 7.5% of your adjusted gross income and you can deduct the amount that's over that hurdle and you decide to itemize. Now, on the other hand, if you don't have enough total deductions to itemize, you may want to look into whether or not you can offset those costs with an FSA or an HSA.
Summer's coming up, right? Time to hit the beach. They're hitting the gym. What about a gym membership?
Well, that's a lot clearer case where the IRS is not going to, under most circumstances, let you deduct your gym membership.
What about health-focused devices? Okay, the Oura Ring, your Apple Watch.
My Fitbit, the one that I've had for 10 years. Oh, if I could deduct that, because I lose it quite frequently. The reality is, under most circumstances, you, again, are not going to be able to deduct the cost of your Fitbit, but you may be able to get reimbursed for your expenses in buying a Fitbit if you can secure a letter of medical necessity, but you want to go onto the IRS.gov website and do a little searching to see if those circumstances would apply to you.
Maybe you're seeing a nutritionist, right, Carolyn? Get healthier, learn to eat right. Can you deduct that cost on your taxes?
Well, if you have a specific medical diagnosis that this is connected to, there may be generally may be there may be an ability to deduct that, but not if the cost is just for the purposes of weight loss and improvement of your overall appearance.
Finally, Carolyn, what about mental health care costs? Can that be tax deductible?
Absolutely. Psychoanalyst, psychologist, for you and your dependents are deductible. But again, you have to get past those initial hurdles of more than medical expenses greater than 7.5% of your adjusted gross income and making the tough decision as to whether or not to itemize versus taking the standard deduction.
Carolyn, great to have you on the show today. A lot of useful information there. Appreciate it.
Thanks so much.
Coming up, how strong will Apple's Neo sales really be? We'll discuss that next. Don't go anywhere. Hello and welcome to Asking for a Trend. Apple made a low-cost bet with the new MacBook Neo to unlock a new market, but our next guest sees this launch potentially falling short of expectations. Ian Bayer, Suit CEO and founder, joins us now to discuss alongside Yahoo Finance's very own Dan Howley. Welcome both. Ian, I'll start with you. So Apple comes out with the MacBook Neo, and plenty of folks are saying, finally a Mac for the masses. This thing's going to sell like hotcakes. It's going to soar. It's going to go vertical. You sound kind of skeptical. How come?
Well, what my company does, our really only job, is to unravel the logical equations behind the brand choices people make. So we looked at the data. We looked at 20 million people who are currently in the market for a PC. And what we saw, first of all, the same 85-15 rule that applies in PC ownership, or only about 15% of people have Macs, somewhere between 14 and 15, that applies to our intent signals as well. So we see going in, 85% of the people who want to buy a new PC this year are Apple resistors. And Apple is a very polarizing brand. Either you're in, the cult, for lack of a better term, and I'm a member, I can say that with pride. But being part of the Apple nation means you're willing to accept. You're not always going to have the most technologically proficient hardware and software on the market. It's going to be very easy to use. It's going to be fun. And there's a real community in Apple world. They built an entry-level product that is much more souped-up iPad than it is scaled-down MacBook. So they've sort of landed in a place that's betwixt and between. For Apple loyalists, they are pre-ordering them, and they'll buy them for teenagers. They'll buy them as a backup computer, a knock-around computer, but its tech specs really make it more like an advanced tablet. So it's like not quite Apple enough for Apple diehards, definitely not PC enough to get someone to give up a Windows machine or even a Chromebook, especially when you can get a great Chromebook for a couple of $100.
So my take is that I feel like a lot of people, once they see this in the wild and once they see people using it, and my brother, for instance, that's his computer, right? His wife has, I think, something, and like they share it with, my nephew. I think once people start seeing this out there, they'll be more apt to use it. And I think that, when you compare this to something like, the quality is crazy compared to something like what you would get from Windows, right? And look, hey, hands up. Got a bunch of Apple stuff, built my PC at home, right? I play games on my PC. I like to float, between worlds.
Games, by the way, a huge factor, because when gamers got news that this was only going to have 8 gigs on board and it can't be upgraded, gamers said, I'm out. And when you look at the sheer number of people whose motivation for buying a new computer is simply keeping up with gaming tech, well, they're right out of the game with this model.
I do think, though, if you're buying a computer in this price range, you're probably not thinking games. The other thing is, it's Mac OS, so it's different worlds, but you could still get a lot of iPhone games on there. You would still be able to play those. And I saw some of they're like Zelda, knockoff. I'll say that nicely. And it ran very well. It's a competent system. I think the win that they have is if you're in this. A lot of people don't go to stores anymore, right? But former Best Buy employee, if you're walking down the aisles and you saw this, no offense to HP or Dell, but you see this thing sitting there, a little chunky, crunchy, you squeeze the edge and it's creaking and stuff. You shake it a little bit, it sounds like there's something loose. And then you hold this Neo, you're gonna be like, oh damn, am I rich now? Like I can buy this. And it's one of those things, you could drop that thing, and look, hey, I don't pay for this. This is the company, so don't fire me, but I throw this around like nobody's business. And the quality of these things is wild to me.
And they stand behind the tech better than almost anyone. But I really think this is more of a market warmer for them. They're going to sell probably 4-6 million units, get them in a bunch of homes, but it really sets them up very well for the next Neo. Because chances are, if you follow their typical pattern, they'll introduce a Neo 2 or something along those lines, probably by this fall. And if they introduce that at a price point of like $799, even $849, at the same time the tariff crunch starts to hit all of their competitors, and it's going to become almost impossible to buy a Windows PC for under $800, now they'll have something with better tech performance that meets more people's needs. The Neo will have an established base of users. The name will have cachet. So if I'm Apple, I'm playing the long game, and I just want to use this to seed the market for what I really have planned with the next wave.
I wonder if the reason why they, I think it's, what is it? How much RAM is in it? Is it? It's 8 gigs. So I wonder if they did that on purpose, just
not
knowing,
expandable.
Right. Yeah. But I wonder if they did that on purpose, just knowing that, you know, okay, well, the memory crisis is here, right? So like, let's just do this, you know.
Sort of planned obsolescence, right?
Yeah. But I also,
and by the way, also only has one USB jack.
Right. Well, 2 USB-C, 1 USB 3.
That's right.
The one thing that I would say is, if I'm buying this and I have an iPhone, well, then I'm locked in, right? Like now I'm part of, I already had an iPhone, now I'm thinking about dabbling this. Now I'm in there. And
You're now one of us.
Right, now I got to get the watch, the headphones, I got to get the services.
Yeah.
Got to watch Pluribus, which, by the way, great show. Just, you know.
So good.
One data point you mentioned there, I thought was interesting. 85% you said people planning to buy a PC are Apple rejectors, you call them.
According to our data.
Yeah, that's interesting. Why is it? What are they rejecting exactly?
Well, so I mean, these two camps. I'm old enough to say that I was at Apple's agency at the time we ran the Apple Switchers campaign, and at that point, Steve Jobs would talk a lot about the first 10%. Apple's foundation, and he would talk about the next 5%, which, by the way, is where we are right now. And he talked about those being people that would bring kind of the gospel of Apple to the masses. It has worked out very well that way, but the way we got people to switch back then was we could have Will Ferrell do a funny ad talking about how he used his Mac and then saying, you know, I'm Will Ferrell and I switched to Mac. That doesn't work anymore. The people who are buying computers now don't care what Will Ferrell or Yo-Yo Ma or Britney Spears or Billie Eilish bought. That's not what's going to pull them. They care what Marcus Brownlee says. They care what Linus Tech Tips out of Canada have to say. And so far, those are two who have not quite been bullish on the MacBook, who have made a very strong storyline. So they are conditioned to believe the most advanced tech is always coming from someone other than Apple, and the most usable tech comes from Apple. But the resistors will tend to look down their nose and say, well, good for you, you're playing around with this fun-to-use toy that's got 3-year-old technology in it. And that's really become a divide in the mobile space, the iOS versus Android part of it, and now certainly in the PC wars.
I think for me, it's interesting because I grew up thinking, I was Android forever, I was Windows forever. And then I realized, well...
Me too, by the way. It's okay to admit it.
Oh, yeah. Hey, I feel good now. I got that out. I'm going to cancel my therapy appointment. It's one of those things where I think that with the iPhone, it's so, they open it... There was a point where Android was so much better because you could open it up, right? And that was like... I could download from these disparate app stores, and then Google was like, let's kind of bring that in so you guys, it'll make it scary if you do that, and Apple was always like, well, you're just going to get this.
Right.
And now it's very much tomato, right? It's you get an iPhone, you get an Android, Apple's app quality is better than what it looks like on Android. I think,
and Apple has more rigorous standards for what they will sell through the app store.
You're not downloading
not
8
to
million,
be ignored.
Right. You're not going to download the same or a different version of, was it 2048? One is the right version,
or an
one's
app
a virus.
That looks just like another app that only 8 people downloaded, but you missed that part.
Yes, exactly.
99 cents.
I do think that at a certain point when it comes to these kind of laptops, and people do want gaming, right? But I think for a lot of people who are, I would consider myself a big gamer, if you're going to look for a laptop that's thin and light, you're probably not getting a gaming laptop because it's just not.
Completely agree.
I mean, I've played around with Intel's new their latest laptops with their own GPUs. blew my socks off. They were across the room. It was, a sight to see. I was able to play these games on this system that normally I would say, yeah, I'm not doing that. Like, what do you mean? Give me something that's like, 4 feet thick and, like weighs. So they're doing that.
Or one of those big glowing alien monsters on the floor, right?
Yes. I do think that for most people, though, when they're looking at these machines, they're going to look and say, that looks nicer. Maybe I'll give Apple a try. And look, I know people that don't want to try Apple. I gave my mom a MacBook, and then she was like, what the hell is this? Why did you do this? She had a Dell, and she was like, just get me an iPad, right? So now I'm a little upset because, iPad OS is getting more like Mac OS, and why did she get rid of it?
This is going to feel operationally so much like an iPad with the best non-backlit keyboard.
Yes, well, that's the other thing.
So it's like those things are making the rounds. They've become legend. The underpowered, under-equipped, no backlight. It feels like very much a MacBook Lite. And I think the Neo is I think that's going to be the gateway drug that maybe brings over the next 5% into Apple, is delivering that level of technology at a price point that I think, again, because Apple's making their own chips, it's going to be really hard for the competition to match.
And they have the memory, the pricing power to deal with the memory shortage.
Yes.
Like you said, all these companies that sell these cut rate, again, no offense, but, they weren't, when I worked at Best Buy, they weren't the best quality. Guess what? They're still not the best quality, right? You got to spend a lot of money to get a decent laptop. But Apple has the pricing power to say, okay, we're already good in the RAM space. All these other low-cost laptops, I mean, what was it, Gartner or IDC said you can just kiss those goodbye. Like the under 700 or under 600, they're just off the shelf. So, I mean, Apple will
800 will be the price floor by the end of this year.
Crazy. Who the hell can do, that's nuts.
But that's why, so when Apple slides in with something, looks better, feels better, cooler, and it's $749, that's going to be a grand slam.
Let me look ahead to Apple's next big release. I want you guys to take on this. Polymarket traders betting, here we go, 81% odds, company will release a foldable iPhone this year. Dan, what do you think?
Mark Gurman says it's going to happen, and he's got like a
Has Gurman ever printed a correction? Pretty much.
I don't think so.
No, I don't think so.
I think he's got like a Neuralink kind of like Apple thing, like in like somewhere at Apple. But it's actually as much as I believe that they will have a foldable phone this year, it said launching, which is the key word, right? Yeah. Because they've introduced devices in 1 year in like September or October timeframe, and then launched them in the next year.
Right.
So it would be interesting to see if they actually
launch it in
off.
a non-U.S. market earlier.
Right. What about an Apple foldable? Ian? I'll get you out with this. What do you think?
I'd be very excited to get one in my hands. A little skeptical, given a lot of the fits and starts that Samsung and others have had with their technology getting all wonky. But that's one of the things you do know about Apple is since the Newton, or I guess maybe their home voice, what was it called?
Oh, the HomePod.
Yeah, the HomePod. They rarely get hardware releases wrong.
Yeah.
They usually wait for the point where they know they can deliver a user experience that backs up the technology. Where Samsung, and they were a client of mine for years, they're really good at rushing engineering to market a little before it's ready, kind of like Microsoft. But one thing you know about Apple is they're not going to put it in your hands unless they believe it's rock star tech. So I think I'll be all over the foldable.
I have used every Samsung foldable. To see how they've progressed over the years is crazy. At first we're like, whoa, it folds, and it's like, but I can see like this crease and like the screen.
Well, they're usually fast followers. That's what they've always been. In this case, they were kind of fast followers to themselves.
Yeah.
They figured out what they got wrong, and like 3 months later, it was right.
It's so the Fold 7 is incredible, but it's the 7th one, right? So like, or maybe the 7th or 6th.
And I admit, I had huge envy when I saw actually the doorman in my building was playing around with disposable Samsung. One thing I've learned being in consumer tech as long as I have, the only two things that get people to buy, it's either the tech they have fails, or they see someone else playing with something and they get jealous.
Yeah.
It's failure or envy. And I think there's been a lot of failure and envy built up in the foldable world. I think Apple's going to have a hit on its hands.
I have a friend who's had a foldable for years. She's the only person that I had known until pretty recently, but she would swear up and down Galaxy Flip.
Changes how you use it.
We'll see what happens. Ian, thanks so much for joining us today. That was great.
Pleasure being here.
Appreciate it.
Thank you both so much.
And you can scan the QR code on your screen to go to the Yahoo Finance Prediction Markets Hub, powered by Polymarket. OKX just snagged a $200 million investment from the New York Stock Exchange, valuing its crypto trading platform at $25 billion. Companies will work on several initiatives, including the tokenization of stocks. And Yahoo Finance executive Brian Sozzi sat down with a global managing partner at OKX to talk about this deal.
What is the OKX platform, and where do you fit into this ecosystem where there are a lot of other competitors?
Well, look, we've been building quietly for the last 10 years, and that build-up has now put us in a position where we're managing the second largest crypto derivatives markets on our venue. At any given day, we're on the top 5 list of spot markets. So that's a lot of work in the background on building an infrastructure that is reliable. We do this in one of the most demanding markets, starting from Southeast Asia to Europe, Middle East, Latin America, and most recently, we're bringing that strong infrastructure and its validity to the United States. Now, the big opportunity with the United States is, or crypto markets in general is, if you look at retail or institutions, there's less sort of desire in terms of new listings and new tokens or DeFi. What customers, what people, investors are looking for is, how can I trade and access these equities and financial instruments the same way I access the internet? Now, you look at the internet, we don't have market hours for internet, or your on-demand apps or your delivery apps don't have market hours. So the younger retail investors are expecting that same experience when it comes to trading and investing. And that's where I think we bring a tremendous value. We've done this at scale. A lot of companies are talking about 24/7 trading. We have a unified global order book, and that allows us to have the strong infrastructure and bring it to a company like, say, ICE, which has tremendous credibility, not just in the United States, but globally.
For someone who doesn't have your global view on all things crypto, how are the markets, the crypto markets in overseas different today versus the US?
The U.S. Investor typically has a higher buying power, so to speak. So their behavior is more buy and hold, less trading. There's a smaller group of people who tend to be traders here. But when you look at markets, emerging markets in particular, where there's high inflation rates, they're looking for more aggressive returns. So you see a different behavior there, where they will have more trading activity and they'll be aggressively participating in new DeFi protocols and new instruments.
How will tokenized stocks change the investing landscape? I've heard this about tokenized stocks, I think, for the past year and a half, but for those not familiar with it, how does it change their lives?
Well, look, I think it's a basic principle back to how internet operates, how our on-demand economy operates. Investors today want to be able to price their assets when real-time events take place. This is why crypto markets have been so attractive to them. Now, when you tokenize equities or perhaps futures in the United States, 2 things happen. One, it's about accessibility. So now you could be on a Sunday morning recalibrating your positions, or any given day during the night or what have you. And the other thing that happens, which I think is more exciting for the US economy, is you have an equities market about 50 to 60 trillion on any given day. Can you imagine what happens when we open up these markets to foreign investors? Today, out of that 60, 70 trillion, you have about 18% foreign investors. Once these things get tokenized, they go on chain. They're accessible 24/7, and they're accessible to people around the world. Can you imagine what happens to our equities market cap? New liquidity comes in. It's great for the companies that are on these exchanges, and I think that's great for the American
What does
economy.
happen? Because I think you're bringing up a very key point. What happens here?
I think over the next 6 to 8 months, we see an acceleration of TradeFi companies making big bets, partnering with crypto companies, using their infrastructure to accelerate their tokenization efforts. I think it's going to happen not just by one company, but I anticipate that this is going to happen across the Wall Street, and you're going to see brokerage platforms, you're going to see large exchanges, you're going to see market makers, everyone make large investments towards on-chain infrastructure.
Are the regulators getting on board with this?
I think so. You hear Chairman Paul Atkins, he's put a couple of statements out there that over the next 2 years, he thinks most of financial assets will, in some capacity, be on chain. So I think regulators are definitely supporting this initiative because they understand this is great for the American economy.
What do they need to hear to ultimately convince them? They always feel like they're 37 steps behind on everything.
Well, look, I think they're all about consumer protection. This is why we partner with one of the most credible institutions in the market, ICE and New York Stock Exchange. So what's going to be important for them is, are these crypto companies that have largely been, young incumbents, have they developed the maturity to have the right compliance controls in place and have the consumer protection in place so, somebody, an average Joe, doesn't lose their shirt? And I think that's probably the most important point for them.
What are you helping ICE build? What is that technology infrastructure that you all are laying?
So when you think about the 24/7 trading we facilitate globally, that is built on an on-chain infrastructure and custody models. We're bringing that over to NYSE. We're going to partner with them and co-build a platform. And what that platform is going to end up doing is having their equities, NYSE-based equities and futures products, come on chain. And we are ultimately going to become one of their front ends, a consumer app, if you will, that will offer those equities. I think we will probably have a first mover advantage on those products.
How did they come to you?
I think it was a combination. I ended up going to meet them last year in the summer. And it started with what was meant to be a 30-minute conversation, ended up being a very fruitful 4-hour conversation.
With Jeffrey, the head of the
That's right. That's right. And I think that followed with a number of months where we ideated on products and our vision, ultimately leading to a very fast-track due diligence over 3-4 months. And we're glad we got it done.
4 hours, that's a lot of time. Where do you see this partnership going over the next few years?
I think our vision is that we want to be the most reliable infrastructure partner for ICE and ultimately open up the US markets to hundreds of millions of retail investors around the world. And I think that's a passion point for us. We have this technology, we've battle tested it in crypto markets, and it's exciting to see how that would work out in tokenized equities and futures.
We have some breaking news. President Trump announced that he's extending the deadline for Iran to open the Strait of Hormuz by 10 days to April 6 at 8 p.m. Eastern. The original pause, remember, was set to end on Friday. Trump writing in a post on Truth Social that the pause was, quote, per Iranian government request, and that talks are ongoing and, contrary to reports, are going, quote, very well. Oil futures dropped initially on the announcement, but Brent crude still hovering here around $100 a barrel. Surge in oil prices over the past month weighing on stocks. We saw the NASDAQ closing correction territory today as uncertainty weighs on consumer sentiment. That's a wrap on today's show. Thanks for watching.